Good morning, everybody. It is Thursday morning, January 26th. This is Gil here coming at you from actually today, beautiful sunny day, perfectly clear, running low 70s here out on the beach in Playa del Rey, California. Dr. K, you there from London?
Yeah, same in London, not a cloud in the sky. Odd for January.
Awesome, awesome. Anyways, okay, so like I was joking with Dr. K earlier, if the market went, the model went to a buy signal, we should be shorting the market here, right? Um, but seriously, you're up there, but you're starting to. There's a lot of underlying constructiveness, but you're in a position where you can back up, and our tendency would be to watch pullbacks here to get further invested. We started buying stocks in here with all the pocket pivots, and M&ST Monster Beverage, formerly Hanson's, has done well since then. That's one position we have. Biogen's holding up okay. Gold and silver have progressively improved. So there's stocks acting well, but things have gotten up there, and after yesterday, I think the market's probably discounting the fact that the Fed is really going to keep the spigot open until 2014, and so the liquidity is there. The question is whether it has any allows the economy to get any traction, and in that case, that's something to watch with stocks. But I do think that silver and gold are definitely going to go higher. Dr. K, what's your take on that?
Well, I think all the hard assets answered in unison when the Fed made their announcement to extend low rates for more than a year to the end of 2014. So we're seeing Commodity Research Bureau and oils and precious metals are all coming back around with volume. And I think that we could be into a new changing of the guard, so to speak, from this very volatile, trendless environment to something that's more in a trending fashion. Of course, the caveat is that we get some new material bad news out of Europe. And Europe's full of bad news, as we know from last year. So, obviously we hope that we just continue to get the regular old bad news, like more Greek problems and whatnot. I don't think the markets would react too forcefully to repetitive old bad news, but there could be something else out there. And the question is when that's going to happen. I mean, I think it will happen. But if it doesn't happen for another 2 or 3 months, we could be in a nice little uptrend here in the meantime.
Yeah, so you just got to go with the market. A lot of people send us emails and they show us charts of all-time lows and or all-time highs in this indicator or that indicator, and then they show a chart of some indicator at a certain level that it's at today and what happened to the market 10 years ago and 20 years ago. And to us, that's just a lot of noise. You just look at the stocks. M&ST is a buy on the gap up right at 100. Stock's up another 7% from there. You just buy it there. You don't worry about whether the market's overbought, oversold, underbought, undersold, wearing underwear or whatever. It's just you just don't need to really go there. You just buy the stocks on the basis of the buy points. And it's interesting how people fret over things, and we get a lot of emails like, "Are you concerned about this? Are you concerned about that?" I'm actually really concerned. What happened to Charlie Sheen, Dr. K? That's one thing that's been concerning me.
That's a good question. That was on my
He's
mind.
everywhere. Now he's nowhere. And, that's something I've really been concerned about,
He'll
As
be
far as
fine.
my stocks, for the most part, I'm not really that concerned. Anyways, that's where you're at. You're in an uptrend. You got a buy signal in the market direction model. Probably means we might be a little bit overbought here and you're going to pull in. But, you can try and guess that, I suppose. Looking at the NASDAQ chart, you're just up there, and you could pull back on any kind of a normal pullback down to 2750. You might get everybody all bearish again, and maybe that would be a good thing for the market. But right now, you're seeing a lot of interesting underlying action, and we'll see what this leads to. All you know is that the window's opening here. How wide it's going to open, you'll just see as you go along. But it's mostly a matter of what's showing you love and what isn't. And so I'm just going to go through some of the positions that we've been watching pretty carefully. For example, F5, you have the gap up. Someone was worried about whether if you're buying it up here, you're within range of the gap up, and if you're buying up here, is it an extended position? My only answer to a question like that is that, if you were worried about M&ST right here being in an extended position after the gap up and you're buying it right here, well, you're making money, and if you sat there worrying about whether it's in an extended position or not, you're not making money. So I think it boils down to not just going with the rules and not worrying about things, or trying to find things to be concerned about, because I do think in any environment you will find plenty of things to be concerned about. And I would have to say that in every bull market I participated in, I remember like October 98, October 99, when everything started getting going, there's always somebody out there with something to be concerned about. I remember October 98, I think we were getting into November, and some guy named, I don't know, what was it, Ned Davis, I think it was concerned. No, not Ned Davis, another Ned. Some guy out of Boston. No, he's some money manager. Who am I thinking of? But anyways, he's out there, and he's concerned about the market because the Dow is lagging the market in November of 1998. Well, whoopie-doo, the Dow's lagging the market. The Dow at that point in 1998 was becoming irrelevant, as you recall, because that's when we started the dot-com boom in 1998, 1999. That's when it really got going. And brick-and-mortar companies were out of favor, so it would make sense that the Dow would lag a strong bull market in technology, in internets, and really futuristic or more futuristic-oriented stocks. So, of course, all that has come back down to earth since. But my point is simply that I can remember just about every time there was a bull market. I remember even 1995, that was my first big bull market where I made over 500%. In February, when the Fed raised rates, everybody was predicting that that was going to kill the market and that would be the end of the market. And that was a concern. Okay, you know, well, the Fed's raising rates and they're going to raise rates for the third or fourth time, and the market will tank. But what happened is when they raised rates in February of 1995, the market rallied, and bonds rallied, interest rates fell, because the market saw that movement as quelling any inflation from what was really a strong growth period for the economy back then. So, you know, what people are concerned about is one thing, how the market actually deals with it is another, and so you want to pay attention to what the markets do. So it amazes me that a lot of people get caught up in so many things to be concerned about, and my advice is I think we should be all very concerned about whatever happened to Charlie Sheen. Anyways, that's my take on being concerned. Let's take a look. I want to look at the S&P. S&P, similar situation, you know, breaking out to higher highs, coming up against the old highs, so maybe naturally a 1,300 test might occur. And, you know, I'd have to say that something like that would be healthy, because maybe the market's going to bide its time. Maybe things aren't necessarily cleared up in Europe. Maybe, you know, maybe we're going to go sideways, but just watch your stocks. That's all you need to do. Other than that, if you want something to worry about, I say worry about Charlie Sheen. Anybody else? You got anything else we can worry about, Dr. K?
You know, you're making me Google Charlie Sheen right now. What's going on? He's a curious character, that's for sure.
I don't know. I just caught my kids, you know, yesterday at dinner time, my kids, just all of a sudden, the two of them are talking to each other, and every other word coming out of their mouth is winning, duh, and for a second, I thought, what's going on here? Apparently, at school, the kids someone got a hold of the Charlie Sheen video, and so the entire school is marveling at the wit and wisdom of Charlie Sheen.
Apparently he settled.
Which, you know, and then I thought at dinner time, I said, what happened to Charlie Sheen? He's suddenly disappeared, but my kids suddenly are aware of who Charlie Sheen is. And
a friend of mine said he's up to some new business ventures, so I'm sure he is.
Yeah. Anyways, you can tell how concerned we are about the market by our banter, but let's go through some other names. Okay, the big story today is Netflix on a gap up. I don't know. I'm shorting this because I'm just going to have a short out there to make me feel better in case things do come in. You're seeing stocks come in, but that's a nice gap up. It's right up into resistance. Is it a viable gap up? Not really, because you're occurring way down here, coming into some resistance. So I just want to see how strong this thing is. TIBX has acted well. You had this pocket pivot coming up off of here we told you guys about. It's run up into the 65-day, the 50-day here. So maybe this is a little bit overhead, so maybe a little sideways action. But I like the stock. Looks okay. I'd love to buy it on any kind of a pullback into 25 or into the 50-day at 25.54 if that were to occur. So here's a new one we're looking at. It's kind of interesting. This may need to go sideways. I'm just keeping an eye on this one. Got a small position, but you know it's a small stock, but it's kind of interesting. Spirit Airlines, a low-price airline, you know. So nice breakout, some new merchandise. Let's see. All right, let's get to gold and silver. I know everybody wants to know about gold and silver. Well, there's a big breakout. My take on this is you don't really want to get all excited and start just buying the poop out of it here, because you have this big move, and generally gold will have sharp moves and then kind of teeter around, so you wait for some weakness perhaps coming in a little bit. I wouldn't be going hog. Yesterday was the day to do it when we were telling you to pick it up, so you're up more today. and it's acting okay so far. But you could have a pullback. Here's this trend line breakout you had yesterday, big outside reversal. It's in a big double bottom. Remember last week we were talking about these little teeny pocket pivots going on in the GLD, which were sort of like rumblings of price movement to come. So that looks fine. So there's nothing really there. What are we using for the stop on that? The 50-day moving average, Dr. K?
Yeah, for GLD, it tends to work very well with the 50-day, especially when it's on a trend. In this case, it's in a basing pattern. So I would say if it falls back into the lower part of its base, which would be, I'd say, under the 200-day, then we should definitely make an exit.
Yeah, that would be trouble.
Right, but I would be surprised if it does actually make it all the way down to that point.
Yeah, and that's only about what, 4% or so from here. So it's pretty tight. Running pretty tight, and we're coming into the market. The way we're handling this, we're just taking 10% positions coming in and then figuring out how we're going to pyramid if these things start to work. So that's really all we're doing. So you come into MNST and you buy 10%. I think that's the best way to operate in this market. I think slow and steady probably wins the game here, and we actually see that play out in the accounts we're actually running. So if you try to get too aggressive at the wrong time, they bring you in, and you can get forced out. So you kind of have to lay back and be opportunistic in that sense. So that's kind of where we're at. That Biofarm, B-Farm as I like to call it, I'm a little disappointed with this because I thought there's enough power here to send this thing higher, but it's kind of trickled back down on top of this little sort of an ascending flag. But it's hanging in there. The volume is real light today. What's the volume rate today, Dr. K?
We're at minus 57%.
Yeah, so you might be very viable right here. Coming in, I'm actually keeping an eye on. We got a small position here, maybe looking to buy more, but we're picking it up in here, and there's really no place to add up here. So you're back down where you first bought it, and that's a little bit disappointing because you think this thing has some thrust. But a lot of the biotechs recently have come under pressure. I think Intuitive Surgical's action the other day. I don't like this, so I would take advantage. If I'm long this thing, I probably would take advantage of this bump to unload it. What do you think, Dr. K?
Yeah, it's I never like to see a gap down. I mean, when it did what it did the other day, I would have just probably sold that right at the open. And if I were still holding it, I would be selling today or yesterday.
Yeah. So yeah, and this thing, and I know there's we get questions about. I guess someone was out there, and we talked about this once before. That Intuitive Surgical was Oracle in 1999, and we were trying to figure out exactly how that one worked, and I think we showed why that we didn't think that was a valid comparison. It's really not panning out the same way, obviously, but it was really not that similar to begin with. So I would use this as an opportunity to unload and just go back and rethink. If we're starting a real move in the market here, you're just starting, okay? It's not over yet. Maybe it is going to end in the next few days. The market reverses and we go back to a sell signal, and then lots of ugly things happen after that. But all you know right now is we're in an uptrend, and you have some stock positions. Dr. K told you last week his favorite stock, and I would agree with him. One of the best stocks in the market, if not the best stock in the market right now, is MNST, Monster Beverage. So that's where we are mostly, and it's working. So steady as she goes. But I wouldn't try to get too top heavy. I can just tell you, we got 3 different accounts that I deal with, and I have very aggressive, which I went to cash just because I'm very aggressive there. I'm going to run 200, 300, 400%, and I think you're a little bit obvious here, so I'm looking to come back in on a pullback. And then an account that's less aggressive and holding things like gold and silver and MNST, and then an even less account doing the same thing and holding a few other stocks. So I don't think it's what I can tell you from my own experience playing 3 different, Goldilocks and the 3 bears. One's too warm, one's too hot, and the other one's just right or something. The slower approach seems to be a little more consistent. If you come in and try to get too aggressive and get too top heavy, they'll just whip you back, and that seems to be the case in a lot of these stocks. So you want to be more opportunistic, I think, than aggressive here and taking measured positions and just letting yourself work in. If we're starting something big here, it'll last for 2-3 months, I think, at least. Look at, say, the leg that we had coming out of September 1st of 2010. That was a good leg going into January. So about 3 months there. So, we might get something like that, and maybe it's just starting, but it's still early. So you just go with what you're seeing. Let's go down and look at some more stocks. At the Biofarm, right now we're using 27.90 as a stop. So we talked about gold and silver. We talked about biotechs. As I actually kind of got off track there, we got onto Intuitive Surgical. Biogen's acting okay. And you've seen, Alexion also is another one that acts okay. It's holding the 20-day moving average, and it looks actually viable to me here if you wanted to add on a little bit of weakness if you bought in here. Some of the other ones, I don't really care for what this turkey's doing. That's not good, so that's off the table. But again, a small stock, and that's why you have to be a little bit wary of small stocks. I prefer, what are some of the better ones? Biogen's acting better. Alexion is acting better. What are the ones that are a little bit flaky? Cubist, SPPI, ABiomed. That's kind of flaky too. But what do you notice about these? They're all cheaper stocks. So quality is what you're looking for in most cases, and you don't want to get when you're playing with some of these smaller biotechs. Just recognize that there's more risk here. So even Biopharma, kind of disappointing, but it's acted pretty well. So you notice on my screen Netflix is going lower. So I am short the stock, you guys. I know Ross and Dr. K were laughing at me earlier, but I do think, and Ross was.
I had actually no view on it because it's really not my thing. So
actually, my studies of
it's probably from Ross's corner there. I mean, this is more of your kind of style of trade, so I don't mess with this.
Well, you've got a nice retracement. You're 120 is resistance, so I think if the market pulls in, you'll see a couple of these stocks just back off. So I just whack them and see if I can make some money, and I am right now. So we'll see how this pans out. But otherwise, I think the long side on some of these stocks, Monster continues to act just fine. Notice you got 12 out of 15 days up in a row. So this could pull back into 105, maybe even a little lower. It really depends on the general market, but right now that's fine. And you're not getting a lot of volume today as it's going off for the first time in the last 5 days, and so it's acting fine. This solar winds. Well, you know what? Let me. I keep getting off track here, so I apologize for that. Let's. I think these idiots on this Q-Core. I saw the article that came out. I'm not really sure what the problem is, but it didn't really get the stock to the upside. Maybe they're waiting to see if another shoe drops with the other story, but. It's kind of interesting, but still you have this big break and it hasn't really been able to recover, but it is coming down and getting a little support today. I don't know, maybe this thing comes up, but that's been one stock that was acting well, biotech, and then it broke down. So, it's problematic for me, and when I'm looking at the group, I really like the techs right now, mostly. SLXP, you have the Bible gap up here, but it gaps down, so there you have a gap down off the peak, always trouble. It's trying to hold this level here, but as long as it holds the low of this day, which is 45.35, you're okay. It's been able to do that on a closing basis. Flipped under it here, but again, this is a little. Maybe it just needs more time. Maybe money is going to flow into techs as the market consolidates or rotates here, and that may be what happens. So. Jazz is another one that's acted okay. It's pulling in light volume. Maybe it just needs time to set up again. But right now you're obviously seeing money is coming out of some of these medicals, and I even think that we've seen. You see the same pattern a little bit in the big ones. They've lost their upside momentum, and they were doing well. So maybe this group is going to base as technology moves more to the forefront. And among those we've mentioned Solar Winds. We showed you the pocket pivot here, held sideways, boom, there it goes again. So you could be long this one from the pocket pivot. You'd be making money today. Another one, this is a pocket pivot here. I think we passed this one up because it's a thin stock, but look at how this one has worked, and it's holding in pretty tight. For those of you who don't remember Stamps.com, it was the epitome of the .com craze because this thing was trading at 174, I think, back in 99 or 2000, and then went all the way down to like $1 something. I believe, and here it is coming back on this sort of, here's this climactic type of move here, but this is not really a climax top because you were only up, 2 out of the last 4 days here, so it's not really getting out of control, but look at how this thing has come back. It's kind of interesting. I've been watching Open Table because we talked about the bottom fishing pocket pivot. It's still acting okay. Envision is one that everybody gets, and somebody says, is this an improper pattern? It's like, what what's improper here? Is the move to the upside, is that improper, or is it the ensuing natural, as Livermore would call it, natural reaction to this very rapid 60% plus price move off the original pocket pivot off the 10-day moving average? And it's interesting how nobody was concerned while the thing is running up. Well, I take that back. Maybe there are a couple people wanting to sell down in here because it's gone too far too fast. But as the chart shows, too far too fast is a relative term. And finally, when you get up here, you start showing 12 out of 15 days up in a row. That's very powerful. But when you start to see that in a stock that's run up 50, 60% out of a base here, a lot of times it's telling you it's going to pull back. And sure enough, it does. And you know it's a small stock, so you know when it pulls back, it's going to pull back sharply. So if you bought the pocket pivot, or even if you bought the new high breakout, are you in trouble here if you bought at all the proper buy points? I don't think so. Dr. K, what's your take on this stock?
Well, it's showing leading action, especially for a small stock. It's kind of reminiscent of the 90s, and it's great to see a name like this. And you got to ask yourself, what's your risk levels? I mean, if you bought this correctly, you're sitting in profit. And my style would be to continue to hold this and use my 10-day and 50-day rules to get me out of the position, because that means I'll stand the greatest chance of being able to ride this for its longest run if it, say it does go to 32 or 64. On the other hand, some people out there might be, it is perfectly rational to say this is still a sketchy market. 2 days ago on Tuesday, I mean, the last 2 days have been quite a change in the tone of the market. But on Tuesday, you could have still said, this stock has had a high volume reversal, and I'm going to sell half my position, or I'm going to sell it all and take my profits. And that's perfectly sound. And then when it comes back down to the 10-day, you could then reinitiate your position and maybe use a 10-day moving average as your a violation of that as your stop, so that you're not going to lose a whole lot by buying it down in here.
That was Envision. I'm over here looking at Netflix just because it's starting to come up. Let's see what happens. Anyways, it's holding the 10-day right now, so you heard Dr. K's comments. Let's see. Talk about super thin. How about AL? I actually like this Air Lease. Did we put out a pocket pivot alert on this one on this day here? Because I saw that pocket pivot, real thin stock, but notice how it's going higher.
Yeah, we did. We put this one out.
Yeah, and it's just nice and slow.
Actually.
Yeah, it reminds me of those stocks. This is one of those stocks that nobody notices and nobody pays attention to, and it's kind of boring. Air leasing, it's like, but the stock just trucks higher, so, and looking good, so, and that looks fine. So let's go through some more of these names.
CTXS.
Broad Vision shot up to 47 and then sank like a rock to 24. Yeah, we're not really interested in Broad Vision. That's not even a leading stock in my view. I mean, what is it doing? What is this thing doing?
Someone wanted to know if this is a classic top, and yeah, I mean it's almost a rocket stock.
What is that thing? What is going on here? Boy, somebody gonna buy them? I don't know, but I don't think it's on the same category as.
If it made it to about 50, I think it was 51 or something, it would have been classified as a rocket stock and completely shortable. I mean, these rocket stocks are very rare. But that said, I mean, when you see a day where it goes all the way up and then comes almost all the way back down, I mean, you could qualify that as a high volume reversal pattern, and you could take a shot at shorting it if you can get to borrow. And then, of course, in one day the thing collapses almost 30%. So your risk reward is very favorable getting into a short position at that point.
Yeah, so that qualified as a rocket stock short.
Well, almost, not quite, but it's a reminiscent of one, and you could have very firm risk reward where you initiate a short at the close on Tuesday and say you're only willing to give maybe 5% on the trade, and then if it does collapse, these things usually collapse very quickly.
Yeah. Okay, let's go. Let's see. TSCO, someone asked about that one. I bought that a little bit of that yesterday because it's bumping into the 10-day, but it kind of reversing here. Earnings come out on February 1st. It's acting okay. If you bought this, then if you bought in this day here, I think you're doing fine. You use this low as your stop, but it's going sideways. It may not come out right away. I thought it was going to come out, so I took a position, then backed away when it didn't run. So, but it looks okay. Let's look at some other ones here. Let's see. Monster, the best to wait until it hits the 10 DMA. Monster doesn't follow the 10-day moving average, so I don't know if you can necessarily use that as a selling guide. I don't know if it pulls back to the 10-day. I guess that would be as good a spot to try and add or buy as any. But Dr. What's your take on this?
Well, if we're really going into a stronger market environment here, then I'm going to be switching to my 10-day, 50-day sell rules. In other words, if the stock obeys the 10-day for at least 7 weeks, then I'm going to use the 10-day violation to sell. But if the stock violates the 10-day in 7 weeks or less, then I'm going to use the 50-day violation as my sell rule. That will keep me in winning stocks for more of their full move.
Right. Okay, let's see. So, and you guys go back and read the book or go onto the website about the 7-week rule, because some people are kind of unclear on that. They want to use the 10-day right away. Oh, here's so I like this question. If I cannot worry about approaching the 2007-2011 highs for the Nasdaq and down to 2%, then I am a loss about about what to think precisely, which is why you don't need to think. So you don't need to worry about anything. I think when you're as a trader psychologically, if you use terms like concerned, worried, how do you feel about this? How do you feel about that? You're kind of getting off into another zone. And I would tell all of you that a great new book that you guys should read is Michael Covell's new book called Trend Commandments. It's a clever play on 10 Commandments, but he calls it Trend, T-R-E-N-D, Commandments. And I love the first chapter because he basically gets into the whole idea of following trends and what you need to know and what you need to think about. And there's an interview with one money manager who goes on TV and they ask him, "What do you think about the market?" He said, "Well, I don't think anything about it. I don't know where it's going to be a week from now. I don't know where it's going to be 6 months from now. I only know what it's doing right now, and we are acting in the following manner based on what it's doing right now." That's exactly the way we look at the market. And so I think just the whole idea of thinking about, oh, it's coming up near its top, I mean, old highs are just highs meant to be broken when stocks are in strong uptrends, so I don't really look at them as something to be worried about or even concerned. There's nothing in the market to worry about. If that's how you feel, go to cash, TransDigm, nothing to say there except that you have a breakout in the pocket pivot, so. I'm always curious to is there something else we're supposed to say? If someone could be more, because people like your thoughts on trans, well, it's like, can you see that for yourself? And if you can't, then I feel like we're not doing our job. Because you have a pocket pivot breakout, what's it doing? Tell yourself, what's it doing? Well, let's see. It pulled back on lighter volume, went back up on a little higher volume, and tried to go to new highs. A little premature, maybe a little extended, so now it's trying to back down a little bit. Nothing there really. Oh, here we go. Now, I like this one. Monster is splitting on 216. That's created a potential dip in the stock coming into that date. Dr. K, I'm going to let you answer that. I got to take a bathroom break.
Sure.
Yeah. Give me a couple of minutes. You can pontificate on that. Let's go to MNST, and you can talk about what your thoughts are on the stock split.
Sure. Now, our studies have shown that the first time a stock splits, it's very bullish. Usually when they make the announcement, but this also assumes a healthy market environment, but typically when they make the announcement of the split, the stock will rally. And then on the day the stock actually splits, the stock will also rally. Of course, that also, it depends on the strength of the market environment. If you're in a bear market, you might only get a rally on one of those announcements. Now, as the stock continues to move higher and splits a second time, that's still very bullish typically for the stock. But by the time the stock splits a third or fourth time, then it's getting possibly a little long in the tooth. And what we've noticed is that if a stock by the third, fourth, or fifth time splits not a 2-to-1 split, but more like a 3-to-1 split, that's a red flag. And sometimes what you're going to see is a high volume reversal off new highs on that announcement, or some kind of deleterious action of that nature. And that's a beautiful exit point. It's a gift when it does happen. It doesn't always happen. Sometimes a stock on a 3-to-1 announcement will actually rally, but watch for signs of increased volatility in that stock, because that means it's potentially forming a top. And obviously for a stock to split 3 or more times, and then on the third or fourth time to split 3 for 1, it means this price has really gotten ahead of itself. So it might be time for the stock to take a break and at best form a basing pattern, in which case you can watch the stock, you can get out of your position, watch the stock, and wait for the next pivot point setup.
There used to be a time when I think there was a guy who even had a trading strategy to buy options, to buy calls every time a stock announced, or a company announced a stock split, because they always went higher. I don't think these days they necessarily do anything. I don't think it's a reason to think about a stock, unless, as Dr. K was saying, you see several stock splits and maybe second, third, or fourth occurring after a sharp move to the upside. That's what you're talking about, right, Dr. K?
Right. Well, that's assuming the stock is obviously the stock split 3 or more times. It's made a good, it's had a good run, and that also assumes that it hasn't. These stock splits have occurred over a shorter period of time, say a year's time, or maybe a year and a half, and it hasn't had a year in between where it's just basing out because of the bear market.
Yeah. Here's a good question. Do you think gold looks better than silver? I personally like gold because I'm partial to that kind of. I love the way gold under light, that golden color really comes out. So I do think gold looks better than silver myself. But that's personal preference. What do you think, Dr. Do you think gold looks better than silver, or vice versa?
Well, yeah, from an aesthetic point of view, I much prefer platinum, and therefore I like the looks of silver because I like the white metal.
Let's see, are you talking about the chart, or they're both coming up, they're both giving you buy signals. Again, this is something to overthink. Which one looks better? I don't know. The only way one can look better than the other is on jewelry, I suppose. But other than that, it's just a technical situation. They're both buy signals. They tend to move together. I think you're seeing silver outperform, so it's not a matter of whether silver looks better. In the short term, silver has been outperforming. So there's nothing wrong there. So, so in the sense it's acting better, but it doesn't necessarily look better. Can I tell you that it's going to go higher faster than gold? No. But it will tend to, as you're getting a move going here, if it's outperforming, that's usually a pretty good sign, I think. So we'll take it for what it's worth. But, whether one or the other, we have positions in both. So, and I think they're equal positions, correct?
Yeah, that's right. I mean, silver tends to be 2 to 4 times as volatile as gold. If you look at a weekly chart of GLD versus SLV, you'll see the differences. But there's a high degree of correlation between the two as well during uptrends.
Yeah.
So it's good to have exposure, in my view, to both. And if you want more exposure, you can play the 2 times or even now 3 times silver and gold ETFs.
Right.
But I would be careful with the 3 times. We like the 2 times because if you're in a sideways environment, and right now these things are basing, so they could go sideways a bit longer. 3 times ETF is going to have more of a decay factor that's going to cause it to underperform. Compared to when these go on an uptrend, then you want to be in a 3 times because then it's going to actually outperform due to the linear, assuming the trend is fairly linear.
Right. Some other stocks. IDEX, what do you think of the technical action in IDEX? Is there anything to think about? I mean, you got a big gap up here. It's a cheap little stock. It's a cheap, thin little pharmaceutical. So hold tight. It's going higher. I don't know. It's not. I don't think it's something I would buy. Would you buy that, Dr. K?
Well, it was a buyable gap up, but it's a thin. It was a cheap, thin stock on the buyable gap up. In that environment, 3 weeks ago, I wouldn't touch it, and I didn't.
It's losing money.
And it has worked. But I would, if it's going to be constructive, it's going to form some sort of well, it's going sideways right now, and it might give you a pocket pivot to buy into, and that could be potentially viable. I mean, it's a $1.5 billion company, so it would qualify as, not really, barely a mid cap. It's more of a small cap still.
But we haven't had anything to
Biotech,
say
so I'd be
about
very
it.
careful with this one.
Yeah, and we haven't had anything to say about it in terms of being viable. Biogen, which is actually the best, probably, and Alexion. Let's see here. People ask about INV, and we already talked about that. And then I don't really know what we're supposed to tell people. The thing goes up, 60%, and we have some thoughts on it that are useful. It's just pulling back. PII. You had a big move here. What was the earnings growth they announced here? 17%. To me, that wasn't really enough for me to get excited about the stock. I think technically it acts okay. So it pulls in like this on my volume. I guess it's viable. But I would think that's got to hold this level of support here on this breakout, this level, which I guess is around 63.18. I'm curious why your methodology does not see the breakout of REGN earlier this month. Because minus 66%. I mean, we saw the breakout. I see any breakout, but I'm not going to buy a stock that's losing 64 cents a share. It's all on the come. It's all hype and news. They're going to lose $2.55 a share next year, and they've never really made any money. So, I don't know. Not really one that I would be buying because of that. Let's see. Another thing is it's probably. Well, it trades enough shares, but no, it doesn't meet any fundamental requirements. And there have been other stocks in the biotech area that we think are more consistent. But our methodology is usually going to blow off something like this based on the earnings. So, and biotechs with no earnings. If you look at historically big moves in biotechs, if you look at Biogen, you look at Amgen, historically the big moves that they had. These companies were showing strong earnings and sales growth. They had products, they were selling them like hotcakes, and they were making a lot of money, okay? Biotechs, there's a lot of speculative fever that gets into these, but they go up a lot of times as fast as they go down, and I think this one shows you that. It's boom, 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 boom all over the place. Up here, boom, big gap, and then break. So there's a lot of hype and BS, I think, about them, but we see the breakouts. Anything moving up volume, we see. So there's a lot of stuff we have to sift out on a daily basis. And that's why I usually have to chuckle when people are emailing us with some of the most obvious things going on in the market on any given day, because we have a lot more sophisticated screening tools than I think most people do. Dr. K, how far back have you researched the 10-day and 50-day rule?
This would be back to, let me just, it would be definitely back to the 70s. So we're talking, multiple market cycles, because I wanted to see how it worked in dull markets like the mid 70s and sideways markets. Obviously, the 2004 to 2006 were excellent environment to really test the mettle of how the 10 and 50-day worked. And of course, then you've got 2000 to 2002, which is the big bear.
Right.
So with all these studies, I always encourage people to do their own research, because then they'll really understand how the system works, and to do it not just over a couple market cycles. If someone comes to me and says, I've done work and it's gone back 15 years, that's just not nearly enough time. Because if you look at how the way the market's been from 2000 to present, that's 12 years, and that's just one cycle, so to speak. And you really need to go back through the 90s. And then, the 82 to 2000 was basically one big bull market. So that, to study a system over that 18-year period doesn't give you enough information, because then, 2000 comes along, and this decade will blow out your findings very quickly. So it's good to go back, to entirely different eras, like with the market direction model. I've looked at that in the 1920s and 1930s just to see how it worked back then. And I encourage, if you have the data, the stock data, to do so. I've looked at the 10 and 50-day on certain stocks way back then, but they haven't been comprehensive studies. It's just been spot studies to see how the system actually held up. And what's interesting is I really wish I lived in that era, because the charts were incredibly clean in the Roaring 20s, and then even in the 30s. You had just such clean charts. And it's only really been in the last 12 years that charts have become a lot more noisy, so to speak, and thus, tools like the Pocket Pivot were by necessity born.
Yeah. Somebody's asking about Humana. It's not a stock that we ever mentioned buying, so there was really never a point for us to buy it. But okay, now it's a good example. What are we supposed to tell you here? I'm not quite sure. You had a breakout. I mean, here's how you. Let's just do this objectively, so you guys can apply some rules. What is it doing? That's a quiz. It's breaking the 50-day moving average. Here you tried to come, but you closed above it. So this is your first close below the 50-day moving average. Let's say hypothetically. You had taken a position here, Dr. K. Okay, right, just on this breakout up through 90. You see that?
Yeah.
And let's say you own the stock. What would you be doing with this thing? Let's say if you were, I'm not going to say dumb enough to buy it, but let's say if you had bought this breakout here, although I have to tell you, I've been distrustful of a lot of these healthcare stocks. Some of them continue higher, but this one I never really cared for. But what would you do now? Let's say you had bought it here. What would you do now objectively?
Well, yeah. If let's say I was given this stock, I was willed it or something, at the top, then I would probably have just sold it at the top because I just don't like the stock enough. I'd rather have that money working for me in a better-looking stock.
Right. But now that it's done this,
I was a big believer, on the other hand, in the stock with the fundamentals. Say I love the fundamentals, and I bought it on the breakout. Then I would have I would not get married to the fundamentals, and based purely on technical action, I would be selling it either as it comes into its base, back into its base below 90, and not wait for it to violate the 50-day, and at worst, sell it on the penetration of the 50-day, because that's just not good action, and it's then also below my buy point.
Yeah. Did they come out with earnings? No, they come out with earnings. That's just not probably. Did Obama say something about he hates healthcare companies right now and they're evil and they're the reason for the financial crisis in his State of the Union? I actually didn't watch that because I didn't have my boots available that day. They were being resold. But maybe that had something to do with it. I don't know. I noticed a lot of the oils took off. We looked, pointed out this one. This one's been having pocket pivots, and I think we talked about these. Very subtle ones in here, like right here. I think we talked about these, and then they took off after the State of the Union speech. So, because Obama was feeding everyone some line about how oil production has increased to the highest levels in the last 8 years. But if you look at oil production, you actually notice it runs around 2 million barrels if you exclude gas and a bunch of other stuff. And it's been pretty constant. It's slightly higher in 2011, but the same data actually shows that 2 years forward, that trend in oil production is going to drop off. So he also tried to take credit for the U.S. being less dependent, importing less oil, but a lot of that's simply due to the economy collapsing and demand collapsing and so forth. But he'll twist any fact that he can into something that's positive. But I wasn't sure what he said about oil that sounded all that great, but it looks like these guys launched. This guy, CXO and CLR is another one we've been watching. Had some pocket pivot moves here as a breakout, and it's continuing higher. We've told you we don't really care a lot for the oils. 97 was probably the only year where they were really cleanly trending, and it was easy to make a lot of money fast. And some of these things had insane moves. Not so sure. Maybe it happens again. I don't know. With stuff stocks coming into favor, I don't know. We'll see what happens. But the only thing you can really do is if you like oils and you guys are valid and you think there's something else going on, you can just take a position and then follow your rules. What you think probably, and even for us, okay, think about this. And this is how people are affected by experience. And experience is essentially an amalgamation of things that you observe in the market. So, if like for us, the only time we've ever been able to make money in oils was 97. Other than that, it's always been difficult. And on that basis, we tend to have a bias against oil stocks, and maybe that prevents us from playing a move if it develops here. So I don't know. You can think about it that way. And perhaps just go ahead and take a position and use us as a contrarian indicator since we don't get so excited about them. Somebody's wondering how would you pyramid Well, it might be a good way to pyramid. It's really any way you want to. There's no magic formula that ensures you're going to get the best prices every time you add. But what's our simple one here, Dr. K?
Well, yeah, there's two strategies. The really simple one is, and I think I feel more comfortable using the really simple one with ETFs, not so much stock ETFs, but focused ETFs like SLV and GLD. And that is every time they move up a certain percentage, you add a certain number of shares to the position. So it's very basic, and it's designed to catch trends in these focused ETFs. And it works very nicely because these ETFs tend to like the trend. And that assures that your average cost is going to generally be lower than where the ETF is trading. So with stocks, you have the luxury of using pocket pivots as the stock moves higher. I feel probably more comfortable in general just adding to my positions on logical buy points rather than a strict percentage.
Yeah.
But you could. I've done studies looking at just for fun, through very difficult market environments. How some of these leading stocks perform, the ones that are violating the 10-day, but then they get support at their 50-day, then they violate the 50-day. And ounce for ounce, you can use a strict percentage on a lot of these leading stocks. Say every 10% you buy X number of shares, and over time, you'll do okay. If the stock really takes off, then you're going to have a bonanza. But in difficult markets where these stocks are not really trending as they should, you're still going to come out ahead. I mean, you might not make 50% on the position. You might only make, say, 12% on the trade, but that's 12% represents a fairly sizable position because you may have bought the stock 4 times on the way up. So, in other words, that 4 times may represent 60% of your portfolio at a 12% gain in a difficult year. That's pretty good. And then you of course have your other balance buying power to work with in other names as well. So the strategy is viable. Simple strategy for both, but I think it's cleaner to just use pocket pivots or logical buyable gap ups and so forth on stocks.
Good point. Here's a question, and I would say here. I don't know what the point of the question is, but somebody says here, it seems like the only way I've ever made money was to hold for months after buying low. You guys seem to reject that notion, just trade every day. When do you make money? So what's the point here, that you have to buy low to make money, and we buy trends, and we're trend followers. So if you're buying low, you're buying into the counter trend. If you're buying something in a downtrend or something that you think is cheap, then and you make money that way by holding forever. That's fine. But the way we make money is by riding trends. So, for example,
the odds are very against you by buying low and selling high. I mean, that's a very much a misnomer. Buy low, sell high. Buy high and sell higher. It works a lot better. I mean, statistics have proven that out decade after decade. People who buy low may remember the one time they got lucky and the stock went a lot higher from that low price. And as a good friend of mine at O'Neill, who retired when he was 34, just from his market winnings over many years, he said, the worst thing that could happen to you is if you buy low and you end up selling high, because it'll ingrain in you that pattern that you might be able to make money that way. But it's really over time, the statistics are so much against you in making money in that manner. And I mean, the guys like, the trend followers that Michael Covell talks about, Etsy Coda, William O'Neill, all these guys that are employing various tactics. These guys are making money every market cycle. They're well outperforming every market cycle. But I don't know of one person who can buy low and sell high market cycle after market cycle and do well. There's just no one out there like that. I mean, even Buffett has a totally different technique, and he's kind of a one-off. But even him, he sat out one of the greatest bull markets of the decade. His fund didn't really go anywhere from, I think, 1996 to the market top in 2000. And so I would say wait for the trends. The trends will come.
Yeah. But here's how we make money.
Like this.
Yeah, and let me explain to you. I mean, it's a good question if you're somebody who thinks you buy into the accepted brainwashing notion that you have to buy things low and sell them high, as if everything cycles back and forth around a mean, but that's not true. The biggest and the strongest moves occur to the upside in stocks when they're breaking out from consolidation. So how do we make money? Well, we make money by first buying silver on a breakout here, riding it up into this top, and selling out, and then coming back in and buying it here again, and then the thing goes bonkers and runs up here and we sell it into that. So we were up 24% last year, and I think we did pretty well. And that's how we make money. So, and when things really trend to the upside, that's how you make a lot of money. And I would suggest reading Bill O'Neill's book. So that's actually a surprising question. I didn't realize that we had any people in our audience who actually have this mentality of the whole buy low, sell high mentality. Which, you know, if that's the way you make money, I doubt very much if you can make 400, 500% very quickly. So I don't know.
Or rather consistent.
Yeah, but I know guys,
I do that for like a year, but over a market cycle, I'd be shocked. And in fact, if there is anyone out there who can buy low and sell high and outperform the market for more than 5 years with that strategy, I'd love to see the evidence, because it's a very difficult way of.
So I mean, the only way we can answer the question, we'll just show you this is how we make money. So if you're curious, do you think the only way you can make money is by buying things quote low and buying them, selling them high? Then this is pretty much how we do it. So, what do you think? How do you think about distribution days in a stock where there's a high volume down day, but it stays in an uptrend? Is that overthink? Yes. I mean, a lot of times stocks will get hit in an uptrend with some heavy volume. And if you go back, and we go back and look at stocks that we played in the past, and some of the pullbacks are pretty hairy, and they usually you'll see stocks get whacked. I remember back in 1995 when I was playing C-Cube Microsystems, and the stock ran up from the low 20s up to 49, and then it turned south, and it came all the way back to 37.50. I held through that whole thing, and that was really the first pullback to the 50-day, and then that's when I went long like 1,500 November 50 calls at like $1.50, and the thing bounced off and took off. So it's common for leading stocks to come under some pressure every once in a while, and you'll see that happen. So it's normal. As long as the stock holds above, key moving averages or your stops, you're fine. What's your take on that, Dr. K?
Yeah, no, you pretty much said it all. I don't really have anything to add to that comment.
Okay. Someone asked about cores. We're going to wrap up here in about 7 minutes. Core, well, it's up. You had the pocket pivot. We told you about it. If you bought it, you're up another couple bucks. So not really much to think about there. But, don't worry, be happy. How about AKRX? Did we ever talk about this one, Dr. K? I mean, this is to me.
We recommended this one.
Kind of pocket pivot where? Right here?
I think that was on the 18th. It's off the 50-day.
Yeah, but it's another one of these thinnies. It's a thin little biotech, so same situation. Doesn't get me excited.
It's a clean pattern, and you've got earnings there. You've got really robust earnings and sales. Actually, the sales are what really sell it, because the sales have gone from they were 12%, 32, 59, and 69% in the last quarter. And institutional sponsorship has increased for every single quarter over the last, I think, 7 or 8 quarters. So it's got momentum on its side, it's clean enough of a pattern to say, well, maybe you want to take a shot. It is a thin name, so you have to keep that in mind. But the pattern's clean, so your exit point is also clean.
Yeah, but still, to me, thin stock. Someone asked PNRA, that original question about stock getting hit. I mean, here it gets hit on volume, but it's holding above here, so it's okay right now. Like, if it broke down through there, that would be an issue. CMG, kind of an obvious name. It's run up. So, despite the good price action and relative strength, would you be concerned about the lack of volume? Okay, something to be concerned about. No, I wouldn't, because stocks can continue going higher on no volume, and then I suddenly see the volume come in and they go higher. As long as the trend remains in force, there are more buyers than sellers, and that's all you're really worried about. But again, it's if you're trying to outthink if it's going up on light volume, well, when and where is it going to stop, and how do you know some volume doesn't come in that propels it even higher at some point if the thing doesn't want to come down? So we won't get bogged down in that. Thoughts on GWRE IPO? Is there an IPO?
Yeah, it just came out.
I don't know. Nothing to think about. Nothing to think about. Somebody's mentioning AH. I think this is probably a good question here. Pocket pivot. Yeah, but I don't know. I don't get excited about this thing. Every time it looks good, it just kind of poops out. Maybe it works this time, but it didn't work today. So I don't know. I'm not. You like that one, Dr. K? We haven't
Not
put
enough.
anything out on it. We didn't mention the pocket pivot. I don't even know if there is one. I guess maybe there's just a little one here off the. But no, it doesn't really.
It's good. It's good numbers, good industry group, good earnings, good sales. But the problem is that the technical pattern doesn't really excite me, and it also had a gap down on November 9th on earnings, and that kills the pattern for me. In other words, it's had one gap down. That's one shoe. Maybe the other shoe's going to drop. There's better merchandise out there.
Yeah. If silver makes it to the 50 DMA, could you potentially take profit and see how it does with that moving average before initiating another position? Not quite sure what you mean. Are you saying if you bought silver at the 50-day and it comes back to the 50-day, you could take profits? Or are you saying take profits with the idea that it's coming back to the 50-day? You don't know if it's coming back to the 50-day.
You mean the 200-day? Are they talking about the 200-day if it gets up to the 200?
Silver? Well, no, the 50-day is here.
Right.
Here's the actual
I'm
question.
wondering if they just mistook the 200 for the 50-day.
Maybe.
I mean,
Yeah, you're right. That's a good point. Maybe that's what he meant. I don't know. I guess you could. That's resistance. But what I would do, just if I'm that much up on the position it's working, I'm just looking where to pyramid, because the next thing you know, it's popping through the 200-day moving average and making new highs.
right. I mean, it's in a basic pattern, so it's not gonna. I don't think the 200-day is going to be really that important right now.
Yeah. Do you have any suggestions for data providers for back testing? Or do you just use the IB Institute? We don't use Interactive Broker for anything. So, or you mean IBD? That's William O'Neill, not IBD. We use William O'Neill's. I mean, you can get data off of Bloomberg, High Growth Stock Investor. You can get it from. I guess we use Wanda, so that has it. But there's a lot of sources out there. Just go look for it. JBHT. This is a trucking stock. The trendings have been acting fine. There's nothing wrong with them. I don't really get excited about JBHT, but you've seen the truckers and you've seen rails have been acting well. What am I doing? Getting dyslexic here. But some of these are coming in after acting well. UNP probably acts best. So I don't know. We haven't had anything to say. Somebody's upset because I'm making fun of my subscribers. You're here to learn. Well, I think, I just think it's a curious thing when people ask us about our thoughts about a stock, and you see something breaking out and moving up. And again, the problem I have with that, and why I ding people for it, is that when you're asking us, what are your thoughts, it's almost silly. It's, not stupid, it's silly. And the reason it is because there's nothing to think. You have rules and objective ways to evaluate stocks, and it's what we try to teach people, not the idea that you need to ask us our thoughts about a stock. And I think that's where you miss the whole point. You have some idea that we're some gurus that have a crystal ball and we can give you some thoughts on where INVN is going from here. And I would just slap you on the side of the head and say, hey, you're off track. What we think doesn't matter. What the stock is doing based on our rules is what matters. Okay? So, I'm sorry if you get upset if I slap people around, but you should work for me at O'Neill, or you should work for Bill O'Neill, and then you could get slapped around. And maybe you'd go running away from Bill O'Neill's company with your tail between your legs, thusly. So, I'm saying this is a rough business if you can't take a little bit of heat, even from me, and I'm nobody. And dude, but who cares? And so that's what I get upset about. Okay. Do you pay any attention to Elliott Wave? I really like his new CD. Elliott is a good friend of ours, right, Dutch K?
Surf's up.
Surf's up, baby. No, Elliott Wave's. I do remember in 1991, all the old brokers in the Merrill Lynch office, when I was starting out as a rookie, and this is in 1991, middle of 1991, the beginning of the 1990s, the greatest parabolic bull market that I've ever seen in my lifetime. And I remember the Elliott Wave guys in the office, all these old-timers, telling us that we were about to go into a Condra wave, blah, 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 and that we were at the verge of a major top in the market. But in fact, in 1991, we were on the verge of probably one of the most beautiful, wonderful market decades in history. One of them, maybe the 20s is the other one. And so that's what I think of Elliott Wave. It's useless. Although I do like his new CD. Gil, you mentioned blah blah blah. In your view, 65-day. I notice, and I don't know. See, the one thing I know is I got a lot of friends who trade commodities. They like to use the 65-day exponential. And I notice you see silver come back, and the black line here is the 65-day. It holds it, and you'll see that in commodities a lot of times. And so I think that's interesting. But again, we adhere to the 50-day, and the 200-day, the 10-day, and those you could have gotten in here. And then if you want to, if you like to use the 65-day, this little pullback, you can use it to get into the position here. So I do find that just looking at charts, eye volume, it tends to work. So that was a mean insult on HUM. I know. I'm sorry. Dr. K, do you apologize?
For which? What? On what? What did you say now?
On hum.
Sorry, I couldn't hear you. What?
Somebody said that we made mean comments on HUM.
HUM? Oh, yeah. Mean comments. That's odd. Yeah, it's not the best stock. It's not a horrible. It's not. You could do worse. Let's just say it's not a horrible stock, but there's better out there. Yeah. So you got to train yourself to really go for the best merchandise. And HUM in our view is not the best merchandise. Yeah. If you bought this, it's not the worst play in the world. I mean, obviously there's a lot worse out there. It's not a bad name, but look at when you look at the earnings, for instance, 6%, 15%, the sales 8%, 11%. Those are not even canceling numbers. There's just the stock fundamentally is not there.
Yeah, it's in a different world from ours. So for someone to ask about it, it strikes us as odd. But you can make fun of us too. It's okay. We don't cry too much. Somebody says, oh, hey, Dave, how you doing? Congratulations on your engagement, Dave, by the way. Very happy for you. I met your fiancé. It seems like you scored. Isn't the purpose of the portfolio simulator due to demonstrate real-time how to pyramid? Exactly. And so you'll see him pyramid into the SLV and the GLD when it's the right time to do so. So he's going to use a very simple method of buying the same number of shares that he bought yesterday every time it goes up 10%. Pretty simple. We used that one last year, and that's how we were up, And to be honest, if we had just done that trade and finished out at the end of June, we'd have been up 40-something%. And the rest of the year, we just ended up trickling, a few percent here, a few percent there. Next thing we know, we're up 24% for the year. So, which is fine, but, that's that worked really well, the pyramiding scheme we came up with.
In a year like the last half of 2011, well, especially after the big drop in August, where that was a some nice gains were made in August, but after that point, I mean, the market just went nowhere, and it was just volatile, trendless. That's the worst environment, most challenging environment. So if you can walk away from that kind of environment with a drawdown that where you're still ahead, then you've done all right. You've managed your risk fairly well. And of course, in hindsight, it's why didn't we just stop trading mid-year? Well, the market could have also had some great profit opportunities the last 6 months. You never know.
The person asking us how we make money says, I mean buying right and holding for more than a day. Well, we do hold for more than a day. So, but when you have a lot of different accounts, there's some shifting or trading around core positions that we do. So, we have a fair bit of money. We're not running $10,000 accounts. Okay, a lot of moving pieces. So, what's funny? If somebody thinks some of our comments are mean, some of these comments coming from the members who are listening to this are a lot meaner. So, but I'm not going to repeat any of those. You twisted my question, Dan. So what I was saying, I mean relative lows. I'm a trader. Well, okay. Well, you can email us, Greg. No big deal. Nothing to be all worried about. We're seeing. Let's see. Is it a good sign that a possible bull is starting just due to the fact that we're seeing a rise in pocket pivots? Usually that's positive. It's something that we saw in the summer of 2010 before the market turned in September. And that's very positive generally. So, we're seeing that now, but the market is in something of an extended position. We were seeing a lot of pocket pivots showing up in the summer of 2010 before the market turned. Now you're starting to see a lot of them percolate now. Now, whether that is just a sign that everybody's rushing into the market now, and we're going to have a little pullback, I don't know, but I think it's constructive on its face, and so you just take it for that. But the bottom line is, okay, we have an environment that's been improving, and now that we're in here buying stock, are we up on our positions? Yes. Are we making a lot of money? Yeah, a little bit of money. For some people, being 7 or 8% up on a stock is a lot of money. For us, that's just getting going. But it is constructive feedback from the market. But are you in a position to pull back? Yeah, and I'd like to see how the market handles that here. And if I'm playing very aggressive positions myself in one account, where I'm running 100, 200% positions, and I run up very quickly, 10 or 15%, I'll back off and take profits. When the market's a little bit extended, and just back down to normal size positions, 10% or so. And that's trading around a core position. So, that's what you do when you're trying to jam the market. It's how you make 100% in a month, which I've done. It's how you make 1,000% a year, which I've done. So that's really how we do it, Greg. So, but feel free to email us and give us more insight on how you do it. And we don't want to stereotype you at all. So, we apologize for that if it seems like we do. But you should see Bill O'Neill. If somebody ever told him he bought things low, oh my God, they would probably drown in his spittle at that point, right?
Yeah, his venom. Now the great thing about I have to say,
the wires are all going in his brain. Buying low. You say that to Bill O'Neill, and his brain will malfunction.
Yeah, short circuit, I think.
His eyes will spew fire, and he'll start spitting all over you, and you'll drown in his spittle.
But that is a nice thing about having a tough mentor. Is that they keep you in line, and that's really our best efforts here are applied to be tough. I guess Gil's more of the tough love kind of guy, and I think that's great. Because I'm a pretty nice guy about things, but I think it's good to have a countermeasure, with his personality, because it keeps people in line, especially when they screw up or when they ask a dumb question. There is a saying, "Oh, there's no dumb questions." But if you've gone to a certain level of learning and you ask a question, yeah, that question might be a dumb question. You should already know the answer, or at least you should be aware of why it's a dumb question. You can learn a lot from that. So in that sense, I suppose there are no dumb questions, because if it's a dumb question, you'll know why it's a dumb question. You'll learn from it.
Yeah, and with Bill, you'd have to sit there and take his abuse as he was teaching you a lesson. And I saw a lot of people who couldn't handle that, and they'd either leave the firm or just become, they'd shut up and not deal with him because they didn't want to be slapped around. I used to talk to them every day, so I got used to being abused by him. But then after a while, I would abuse him, so it works both ways. And as somebody says here, they love my abuse. So yeah, I'm actually the soup Nazi of the stock market. So no soup for you.
Yeah, you are the stock Nazi.
EXP looks good. I'm not going to beat you up for this one, but it broke out and it's holding the breakout. That's all you need to know. Okay? Saying you have nothing to think about is a way of thinking that is new to some of us. That is also the interesting paradox. But as life and existence is full of what they call koans, the Zen koan, which is an inherent paradox. And if you think that you don't have to think, that in itself is thinking. So that's true. So just try to blank out. What do you think is an excuse for wanting someone to give you the answer so you don't have to think? I like that. That's a good. Some thin, cheap stocks are okay, and some are not interesting. Yes, that is true. And you can make money in thin, cheap stocks that work, especially if you don't have to buy big positions. So, like I like this little save here, but it's a thin stock. So what are you gonna buy? We're gonna buy 5,000 shares. You try and buy 50,000, you're gonna send the thing to $20. So you can buy a little bit. But if you have a small account, you don't only need to buy 1,000 shares to have a decent position. Then something like that could probably work. But I like this if it pulls back down into the 50-day below 16 or right around there. It looks okay. But it may need to go sideways for a period of time. I'm going to try and get through the rest of the questions before we shut
also in terms of the thinness of stocks, you get certain market environments where smaller caps are favored. And of course, then you can buy a whole basket of these things. Even if you have a big account, you could have 16 of these positions, where you're force-feeding the money in the best ones. And I've done that quite a few times in the 90s, because we had some small cap environments, like 1991, for instance, was amazing for small caps. Right now, in the last 3 years, we have not really been in a small cap favorable environment. It's all about odds, and for every small cap that has worked, there's a whole bunch that don't, or even worse, blow up.
Yeah.
Whereas in 1991, you get a lot of small caps that are all kind of working in unison. So you have to know your environment and know where to position your money.
Yeah, exactly. So some other comments. There's some really great comments today. If you want a friend, get a dog. That's what Gordon Gekko said. I'm not here to make friends. I'm here to make money. There's another guy that says that. So, anyways, for what it's worth, you're constantly referring back to the rules and discussing them. Is what I really like about the webinars, reinforcing what I should have clearly in mind. That's what we're trying to do. And I think by sometimes beating you up, I think that was even part of Bill O'Neill's technique, is that he would just slap you around so hard that, in a way, is a sort of operant conditioning, like the mother dog picking up the puppy by the scruff of its neck and shaking it around and growling at the same time. That's operant conditioning that says, hey, this is bad. And I think that was part of Bill's teaching method. But he's, one of the greatest teachers I've ever seen in the market. And one of the ways that he does it is, I think, by beating the poop out of you every once in a while.
Sekoda is one of the greatest teachers for futures traders. The street is littered with very successful futures traders today that were students of Ed Sekoda's, and Ed is probably the toughest teacher I've ever seen in action. I spent the weekend at his house. He had a student there, and he is so forceful with his personality. His emotional strength is amazing, and his condition on taking a student is that they're going to be able to withstand that. I mean, you got to have serious mettle, seriously thick skin to survive a course with Ed Sekoda.
Yeah. There you go. Gil reminds me at times of Gunnery Sergeant Hartman in Full Metal Jacket. Actually, one of my favorite characters in any movie. Monster Morales and conservative Chris. Chris is actually not that conservative, so show him what he needs to see, and he becomes a wild man too. I like this. This is a good one. I like this one though. Let's see. Oh heck. Just looking around, I think we covered everything. We went over a little bit. Just kind of watching this market flop around. There's not a lot to do. Sitting with some of these positions, so just hanging out. Gold and silver is still acting okay, but they could pull back. Anything could pull back here. But so let's just sum up. We've seen pocket pivots, and we've seen things start to work. We've talked about on the webinar, our favorite stocks, and we pointed out some of the initial rumblings in the metals earlier. Now you're starting to see what looks like a buy. So maybe you have something here you can buy positions in. We are currently, what percent invested are we right now, Dr. K? Do you know, like 40?
In the fund, or
what fund? We don't have a fund. I don't know what you're talking about.
Depends on the.
In our account that we run together. What do we?
That's about
40%.
That should be about 50%.
Okay. We're actually running AGQ, DGP, and 3 stocks, 10% positions roughly. So I think we're 50% in, and so that's how we're approaching it. If we get tagged in our positions and we're 50% in, and we get stopped out at say 6-7%, which is what we're looking at maximum, then what's our risk? 3%. 3 to 3.5% to our portfolio, so we're willing to deal with that right now. And that's kind of where you put your mind, is you come in and you take positions based on the buy signals. So you may have MNST, Biogen, the silver and the gold, maybe a couple others, and you come in and you take your position. So now you're invested 40-50%. But what you do is you ask yourself a very simple question, and that is, okay, if I get in 50% and the market hits my stocks and they all drop 5% in one day, what is that going to cost me total to my portfolio, and am I willing to deal with that? Okay, and if you can be honest with yourself, you'll come up with a number that is reasonable. Okay, and if like I said, this market is not going to begin and end in one day. Bull runs will last at least several weeks, and oftentimes longer than that. So you got plenty of time here. But in the meantime, don't worry about if the market overbought. Is it going to pull back here? It may. Probably will. I mean, I think it should if it's going to go higher, and I would love to see that, but it may not. I mean, we even think it's going to pull back in the last week or so. But you don't have to worry about it. Just take your positions and decide for yourself, based on the stops that I'm using for these positions and the position size, if the worst case occurs and I am stopped out of every single one of my stocks, how much money do I lose? Okay? And you're going to have a hard number, all right? And you're going to ask yourself a very simple question. Can I deal with that? And if you're not honest with yourself, and you're one of those people who thinks that you can handle risk and you can't, you're going to find out when you start seeing dollars disappear from your account. And keeping that under control in such a manner that it doesn't really affect your psychology, you can stay with your positions, depends on position sizing as well, I think, as well as number of positions. So So that's the way we're approaching it. We get 50% of it invested. If we get knocked out, we're going to be down 3.5%. Can we deal with that? Definitely. In fact, that's almost nothing. So that's how you do it, you guys, and it's really not that hard. So don't make it too hard for yourselves. We know what we're looking for. If we get a pullback here and you're only 50%, maybe some of you I know are 20, 30%. If you're less invested, then it might give you an opportunity to come in a little heavier if it occurs constructively, and hopefully we'll be able to guide you through that, and that's what we would hope to be able to do. So that's all you can do. Anyways, I'll try and end on a less abusive tone, and wish you guys all a happy trading day. We'll see how this thing comes in, but I would watch and see how the market comes in. Be prepared for pullbacks from time to time. They're normal and sometimes necessary to bring out some of the excessive bullishness that occurs in the short term. So that's all I got to say. Anything, Dr. K?
No, I think that's a good wrap-up.
Oh, somebody says, I just want to close up with one question. Envision reports this afternoon and is tanking again. It's down 6% after being up 4% plus. I took my profits as I do not want to get caught with liquid stock with an illiquid stock after hours that disappoints in earnings. Should I get blessed out? I think when you have a stock that runs, just real quickly, and some way to think about, I had the stock too, and I blew it out in here. I blew it out up here, and went a little higher the next day. But to me, it's like this kind of a run. It's ready for a pullback, and it needs to build a base. And so I think that's a reasonable strategy. But if you bought it down here, you're still way up, and you like to sit with things longer term, you can try and let it build a base. But I also think it's reasonable to take profits and then let it build a base, and then go from there. So because it is a thin stock, but you're still well above the pocket. But that's just one way to think about this, and you got to keep this in mind as you're seeing stocks either get too far extended to the upside and then start to pull back, or just pulling back normally. So anyways, on that note, you guys, good luck, and we'll catch you next time. Take care.
So long, everyone.